just a recap, just a reminder of what we've been through so far. So we have our program overview here. This is phase one of our session. So we do have a couple more phases to go through. So this is what's called our beginners phase at the moment. And basically the sessions that you can see highlighted in green, these are all the sessions that we've already been through already. And these sessions are up on YouTube as well. So if you are brand new to this session and this is your first time seeing myself, just to let you know that these sessions have been recorded and they are available in our YouTube channel as well. So if you have been on the previous sessions, we hope you agree that they've been very, very useful so far, and hopefully you've got some use and actually starting to utilize that information in the markets as well. But just to understand as well, what we're going to be going through today, our topic is going to be support and resistance. So we have covered the topics, like I said, in green, and after support and resistance, we'll be going through the last sort of a few sessions of this particular phase, and then we'll look to recap particularly this phase one before we move on to phase number two. So just a reminder, if you were on the previous calls, especially the last two sessions, if you remember, we had our topic which was actually on candlesticks and market direction. So if you remember, we had part one, which is where we actually covered how candlesticks work, and that's where we were identifying the open, high, low and close of a candle. That was the actual characteristics of a particular candlestick. And then we started to go through some patterns as well. Now, I did mention to you guys that we do have a number of candlestick patterns that are available in the market, and you'll see a lot of them out there. And the ones that we actually focused on, I believe, was the engulfing candlestick pattern, which is the bullish and bearish candlestick pattern. Don't worry, we'll be looking at these through the charts as well if you cannot remember. And we also started to look at identifying market structure as well. So with that, we were identifying highs and lows in the market, and we were using this really cool zigzag indicator to help us along the way. And then the session just before I sort of went away, we had a part two to that. And that's when we started to introduce some average prices using the EMA. And we had this 50 and 200 EMAs that we were using to sort of identify some sort of trend in the markets. And we also introduced you to something called the fib levels, the fib retracement. So if you remember, the 618 level is something that we actually introduced as well. So like I said, if you are brand new and you don't have any idea of what I've just said, then the sessions that are available on the recordings on the YouTube channel will get you back up to speed in no time. And like I always mention as well, with these sessions, I always recommend to re-watch the sessions again and again until you've really taken in all the information that is needed, because you are all at different levels in your trading journey, and some people might be more advanced than others. And what you will tend to find that the more sort of repetition that you do in terms of the trainings and spending time on the charts, the better you're going to get in the markets. Simple as that. So the final recap I was just going to mention before we move on to support and resistance. If you remember, we had something called the A+ setup. So what I mean by that is I basically graded a setup in terms of what we tend to look for in the markets. Now, this is not like the gold standard kind of thing, the best strategy in the world or anything like that. You know, I'm not going to promote it like that in any way. But what I'm basically giving you here is something called a high probability trade setup. So basically, if you were to go into the markets and just enter randomly a buy or sell, you've got a certain likelihood that that trade is going to go in your favor, yes or no, right? But if you can give yourself a little bit of an edge in the market by, for example, identifying some trend, so identifying where price is sitting, where the candlesticks are sitting in comparison to the EMAs, using that zigzag indicator to identify is the market in an uptrend and a downtrend, is it near a high or a low, and then using that pullback that we mentioned, the 618, and then looking for a particular candle pattern as well. So there were the sort of 4 points that we had gone through on our previous session. And I remember I actually gave you some examples. I think I gave about 4 or 5 examples on the charts that happened that week as well. But like I said, we will go through them as well. And I did actually mention that if you wanted to go away and to look at TradingView yourself and identify some setups, then feel free to obviously, hope you guys did manage to actually do something like that. Even if it's 5 or 10 examples, have a look. If you don't know about the setups, then no problem at all, because we can go through them in future sessions as well. So hopefully that's given you a little bit of recap. That was like a 5-minute sort of whistle stop tour on where we have been and where we are currently at the moment. And so hopefully if you just give me a thumbs up, that all makes sense so far, what I've just gone through, and you're sort of back to where we were, then that'll be great. Okay, fantastic. So got some thumbs up. So we know where we are now. We've kind of covered the recap, what I wanted to, and without further ado, we can actually then move on to our next session. So this is session number 6. This is support and resistance, and this is all about identifying key levels in your charts. Now, what exactly is support and resistance? Well, the idea is that by the end of this session, hopefully you're going to understand what is support and resistance. I'm hopeful that you're going to be able to identify some key levels on the charts with a bit of confidence. I'm hoping that you're going to identify the difference between drawing lines and zones, and you'll be able to identify what we actually use in terms of the support and resistance and how we go about interpreting on the charts. And hopefully you'll be able to see a demonstration of how I draw support and resistance, and hopefully you'll be able to use it in a right way and apply it to your charts as well. Fantastic. So what is support and resistance? So what I've done here is I've actually drawn a line chart. So this is like a trading chart. Instead of showing you your candlesticks, I've actually just shown you the line chart, which is the close prices on here. So you can see, for example, like here, market was moving up, it kind of rebounded, and then it's kind of moving slightly upwards again, it rebounded again. So every time it hits what's called this red area here, we call this resistance. And another word for that is known as ceiling. So if you imagine a bouncy ball, you've got a floor and you've got a ceiling, right? If you've got an extremely bouncy ball, it's going to hit that ceiling and rebound off, and it's going to come and hit the floor, and it's going to keep hitting the ceiling and the floor, keep hitting the ceiling and the floor. Eventually, once the ball hits that ceiling enough times, it might end up breaking the ceiling. So hopefully it won't break your ceilings at home, but in the charts world, it's going to break a ceiling, and eventually what's going to happen, that ball is going to carry on going, and eventually that ceiling will now become a support. So a support is known as the floor, and it's also known as the demand zone. So you might have heard of the word supply and demand. Now, in this particular session, I'm going to focus mainly on support and resistance, but I will mention about supply and demand maybe in future sessions as well. Essentially, for now, what you need to know is that for any support level where the market keeps bouncing off the floor here, which is the support level, basically what you're going to identify here is that this is where there are strong buyers. So what I mean by that is that the way the markets move is that if there are more buyers in the market than sellers, the market moves up. If there are more sellers than buyers in the market moves down. So in this particular instance here, where there's a blue support here, there's more buyers at this point than there are sellers, hence why the price moved up. But at this resistance area, which is known as the supply, we had more sellers here, and therefore price moved down. So basically, price moving up means that there's more buyers. Price moves down means that there's more sellers. Make sense? Hopefully fairly simple. I'm going to try and keep it very, very simple, very, very clean, and try not to use too much technical jargon where possible. Okay, so how do we actually identify key levels? So what we do now, I've actually swapped the line chart to a candlestick chart now. And what we do is that when we're looking at a chart, what we are trying to identify is what we call previous highs and lows. So when I say previous highs and lows, what this basically means is that I'm looking for places where price has touched multiple times. So in here, we've got a low here, we've got a high here, we've got a low here, a high here, low, high, low, high, low, high, low, high. That's what the general trend is of the market. Because there are multiple touches in here, you can say that this level is known as a support zone because the ball is bouncing once, twice, 3, 4, 5, 6, almost, I mean, if you count these as well, I mean, this is a line at the moment, I'd rather draw this as a zone. And then eventually market goes and hits the roof, i.e. the resistance. 1 touch, 2 touch, 3 touch, back down. Another touch, and then eventually the ceiling broke, and then eventually that ceiling became what we call now a support. So the resistance turned to a support. So why is this important in trading? Because we're trying to give you structure in the market, because the market, like I said, markets go up and down, but what we're trying to identify here is that there are going to be strong areas in the market where there's going to be a lot of buyers present, and there's going to be a lot of strong areas where there's going to be sellers present. So when you see like a strong reaction in the market, right, for example, this one here, the market hit that resistance and it immediately shot back down. This tells you that there was probably big players in here that said that, look, I don't want price to move above this resistance level. I want it to come back down. So that's basically where you're seeing sharp moves away, is where the big players are coming in and actually moving the market in the different direction. So I'm hoping that makes sense so far. What we're going to actually show you here is some zones versus lines, and I promise we will be going onto the charts and actually showing you how we draw support and resistance, and that's where it's really going to hopefully kick in here. So what I'm going to do is I'm going to take you back onto a line chart again. So this is a trading chart once again, but what I'm going to show you is that we have, you might see in support and resistance, if you were to go on like YouTube, type in support and resistance, or Google, whatever, you're going to see so many examples of support and resistance on there. And the idea is in this particular community, in this training that we're doing at the moment, is that we're trying to show you what we believe is the most efficient way of using support and resistance. So what you might see is that you might see some particular levels where, for example, here, price reacted off this particular area where it turned, the price turned here, price turned here. What I like to call these, you might want to make a note of this, is called A tops. So what I mean is that actually looks like an A, or the top of an A anyway, yeah, capital A, capital A. And then the opposite of that is what we call V bottoms. So these are V's, V, 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 and then we've got A. Okay, so if you want to make a note of that, you've got A tops and V bottoms. That's what I like to call it. So you're basically looking and you're seeing now we've drawn a horizontal line on here, which is our resistance level. We've drawn a horizontal line on here. Now, can you see that this A here and this A and this A, they're not exactly in line? Okay, this is trading. This is not like the textbook support and resistance chart. This is how it's naturally going to look. You're going to have some A's where they're not quite exactly at the same price. So this is where we talk about zones rather than lines. So you can see how we've highlighted the red area is more like a zone. It's like a range, okay? And this is a range where we've seen a lot of, for example, sell orders existing here, okay? So we've got, again, A top here, but you can see that all these A tops are all within this particular zone here. So I hope that makes sense. Again, with the V bottoms, this green shaded area is your zone. And that's why these V bottoms here are all kind of sitting within that zone there. All right. And like we said, price tends to react, not all the time, but it tends to most of the time react to these zones. All right. Thumbs up. Does that make sense so far? Hopefully it does. All good. All right. Now we come to the juicy stuff now. So we're 8:15. That's good. Good timing. So the method, how do we draw support and resistance? Now, if you want to take a picture of this, no problem, take a screenshot of it, whatever. What I like to do is I love to give you the stabilizers. You know, when you're riding a bike, I love to give you them stabilizers just to give you that little bit of assistance along the way. And we're doing that here as well. So if you remember in our previous sessions, I introduced you to the zigzag indicator. So I'm going to introduce you to another indicator, which is called support and resistance. So what I'm going to do is I will show you this on the chart as well. And we're going to use the combination of these two in order for you to draw your support and resistance. Once you get comfortable drawing your support and resistance, what you'll tend to find is that you might even just turn these indicators off. But the thing is, because we're in phase one at the moment, I'd like to give you that little bit of assistance where we can to make your lives easier. And what we tend to do is, because if you look at the way we trade, we normally trade sort of intraday trading. So what I mean by that is that we normally get into the markets and out the markets within the same day, right? Like even within the same hour even. So when you look at the Telegram signals coming through on the daily basis, we tend to enter the market and usually TP1, 2, 3, 4s are hit within maybe half an hour, 45 minutes to an hour, right? We're not what we call swing traders where we stay in the market for like days on end, okay? So if we are trading, for example, on the 5-minute chart, 15-minute chart, or anything less than that sort of time frame, you want to draw your zones on what we call the H4 chart. Now, what I mean by that is that's the 4-hourly chart. And that's because the higher the time frame, the stronger the zone will be, okay? So what we're going to do is we're going to draw the zones in blue for H4. And then what we're going to do is we're going to go down to the 1-hour chart. I'm going to draw the same zones then in green. And that's going to be enough. You'll see how busy the chart will look then. And then what you tend to do is on the 15-minute chart or a 5-minute chart, you might draw some smaller zones nearer to where price is currently sitting. So, and once you do that, you will start to see how the structure of the market looks. So just some pro tips before we head on to the charts. We don't want to overdo it. We don't want our charts to look like they've got so many lines across it. We don't want that. We want to keep the zones very clean. We're going to be using the candlesticks, not the lines. and I'll show you that on the charts in a moment. I've already mentioned about the higher time frame, and we also already mentioned about the touches as well. The more touches, the stronger the zone. All right. So without further ado, what we're going to do is that we're going to go into the chart. So just give me a thumbs up if you can see my charts. Okay. Yeah. You can see it. All right, good, good, good. So what we got here is that we've got a basic trading view chart on here. So what I've done is that we are on XAUUSD. If you remember, we have our list of pairs here on the right hand side. XAUUSD, it says gold versus US dollar. And you can see on the time frame on here is that I've put it onto the H4, okay, or 4H here, which is the 4-hourly chart. So what that basically means is that each one of these candles is 4 hours. All right, so this candle opened at 11 and it would have closed at 3 p.m. All right, so each candle is representing 4 hours of time here. Okay, so what we've done is that I've actually put my little replay on here, and I've actually shown you the chart all the way up to the 1st of April. And I've done that on purpose because I want to show you how price reacts in the future to the zones that we will draw. All right, so without doing anything, without adding any indicators, anything like that, we can see that price turns at certain points, right? So I'm going to just tell you very, very quickly or straight off, here's a particular zone where price reacted. Would you agree on that? Absolutely. Here's another place where price reacted at this level here. There's another one here. Oh, but when I hover my cursor over here, can you see if I just keep my line there that we've got 1, 2, 3, we've got multiple touches, multiple touches, multiple touches. There's a support there, multiple touches, multiple touches. So this is going to be a strong zone. That's going to be a strong zone, definitely, because there's a turning point here. There's another turning point just there. There's another turning point just there. Another one there. So how do we draw these on the chart? What you're going to do is that you're going to get a rectangle. So where you can find that is, I believe, you can go into shapes and you should see on there rectangle. All right. So it's like a paintbrush symbol. Once you go over that paintbrush symbol, you should be able to just hover down, under shapes, you should see a rectangle. Okay, now what I do is I put a star in there so I have it in my favorites. What that means is that it's going to be automatically in my little favorites bar just here. So here what I can do is I can get a rectangle and I can just start to draw a rectangle. Let's say from, this is what, end of January. I'm just going to get a rectangle and I'm just going to draw this across on here. I'm just going to do that. Okay, and that's your first zone that you've actually drawn. Now why does my rectangle look like this? If you right click on that rectangle, click on settings, okay, now what you're going to see here is that I've actually put on here extend, and I've said extend right. Okay, so make sure you've got that on your setting. In terms of border, I've just kept it as a default border, and I've put it as a blue line border, and I've put the transparency about 55%. The reason why is because if I put it really, really bright like that, it's going to be too bright on my chart. I want it to be subtle in the background. Yeah. Now you can optionally, and I'm just going to just extend my chart slightly. Sorry, so you can just see what this looks like here. So if I just go back to my box settings, you can optionally add a middle line, and you can see that this middle line gets drawn into the box there. That's, you can draw that, you can keep that in. I haven't got it on my one. And then the background, again, I've got like a blue color background, and I put the transparency really, really low. Again, if I put it very, very high, you can see it's very, very bright. So I want to keep it very low. So I've got about 15% there. All right. Now, in terms of text, you can actually add some text on here. So you can actually say H4, for example, because I know it's a H4 zone. And like I said, I've colored this one in blue. So what you can do is you can actually save that, file save as, and you can call it a template name. So I've already done that, and I've actually got what's called my H4 zone, and I've also done one for H1 zone as well. So if I was to, for example, draw this rectangle, right click, settings, and then if I use my template, H4 zone, click OK, and you can see this is the settings that I've got for my H4, and you can see I've actually put the text H4 in there, so I know it's a H4 zone. Does that make sense to everyone? Can you see that? All right, cool. So imagine you've got your H4 zone on there. And now what I'm going to do is I'm going to introduce you to, do you remember that indicator that we had, the zigzag one? So I'm going to bring that one back on. So I'm going to show you what that looked like before. We had that really cool zigzag indicator, and that gave us market structure. So if you remember on here, if I was just to remove my drawing for now, there's a button here you can remove drawing. And you can see that on the 4-hour chart, that gold US dollar is already showing me what we call supply and demand zones, which are your supply, remember, is your resistance zones, and demand is your support zones. So already we've got support and resistance in some way drawn on the charts. All right, so you know that rectangle that I had, it's already there. My rectangle's there. If I take the indicator back off, if I unhide that, that rectangle is the same as what I had. So that's going to give you that little bit of additional confirmation that, oh, okay, so that is a particular zone on there. Now, these yellow lines will actually help in some way because it will tell you some significant turning points in the market. So for example, this is another zone that I might want to draw a H4. So what I can do is if I get my rectangle, right click on my rectangle and click on clone, and I'm going to just drag that and put it there. And then what I'm going to do is right click, clone, and I'm going to drag and put it right there. So now I've already drawn 3 zones. I'm going to right click, clone, and I'm going to go down and I'm going to, you know where it says BOS, right? It's break of structure, that's what it means. But it's a turning point in the market. So I'm going to put one there because there's a touch there, there's been a touch there, touch. If I just zoom in a bit, you'll be able to see where these prices are touching. This is on the 4-hour chart, by the way. So, and I'm going to do another one where it says BOS again. What I'm going to do, right click, clone. Can you guys see that? Can you guys see what I'm doing? Does that make sense, what I'm doing? All I'm drawing is just some zones. That's all I'm doing. All right, I'm not doing anything yet. I'm not trading yet. I'm just marking out some structure. So I'm going to do here, break of structure once again, a zone. And then I'm going to go and do another one just there. So again, what do I do? Right click, clone. And we'll go again. All right, cool. So now we've got some 4-hourly zones. Now, if I just take that indicator back off, just to make the chart a bit cleaner again, can you now see we've got some zones on here now? Looking a bit better now, isn't it? Not bad, not bad. So let's go back and put that indicator on because this is making my life easy. We've got another demand zone just there. So let's draw, and remember this is on the 4-hourly chart at the moment. So I'm going to go right click, clone, and I'm going to go right down here. And we can just keep going like this. So what I'm going to show you is I did a little demonstration. I'm not going to spend all session doing this, but I've got something where, I don't know if you see this in like other sort of programs. I'm trying to remember a program now. Here's one that I prepared earlier. It's like one of the cooking shows, isn't it? But basically I've got something here that I've already kind of done what we've just spoken about. But what I'm going to show you that there's a few more lines on here. So if I go back to where I was, and I'm going to show you an indicator. So this indicator, if you type in support and resistance, you should see something come up, which is support and resistance levels with breaks, and it's by this Lux Algo. Okay, Lux Algo, put that as your favorites. All right, so once you've got that indicator, that's going to make your life a bit easier as well, because when you add that, all of a sudden you've got these blue and red lines. If I just go back to the charts for a second, my deck, sorry, do you remember we had the blue and the reds there? So this is actually quite handy because this is going to help you give some support and resistance zones. And you know the great thing is that, you know, when these red lines or these blue lines match up with your zones as well, and even the indicator zones, that's just even more confirmation that is a strong zone. So for example, that blue line there is the same as that demand line from the previous indicator, is telling you that it's a strong zone on there. So you can carry on adding 4-hourly zones on here if you wanted to. But what we can do as well is that these are 4-hourly zones, not all of them, but I'm going to now drop to the 1-hour chart, because what happens on the 1-hour chart is that you're going to have slightly more zones appear now because the markets have got more candlesticks to work with. So if you remember, a 4-hour candle is worth 4 these candles, if that makes sense. So each of these candles now is 1 hour. So 1, 2, 3, 4 candles, that represents 1 candle on the 4-hour. So just be aware of that. So now we're on a lower time frame. So now I can see, oh, there's a nice zone there, which the 4-hour one just hasn't picked up because it's too zoomed out. So what you do on here now is, what I might do is I'm going to take my rectangle, I'm going to see if I can clone it, I'm going to put it there, and that's my 1-hour zone. But I'm going to right click on this, settings, and I'm going to change the color now. So I'm going to change that to a green, okay, in terms of the text, and I'm going to change that text to say H1, H1 style, change that. I want green, nice bright green even, and I want the background to be green. All right, so let's have a look now how that one looks. If I just remove all my indicators again, my support and resistance and all that, can you see now there's a clear difference between a H1 zone and a H4 zone? Can everyone see that? Yeah, I hope I'm still with you guys. I hope you guys are still with me. I know it's a Sunday evening, but this is really important to get right. And when you sort of zoom into the chart a bit more, you can see the H4 and the H1 now up here. All right, so let's go again. So let me find another H1 zone for you, and then before I go back to my pre-made example that I did. So let's find another one. So there was another zone just here. So and you can see like when I'm going back, you can see that's been multiple touches on some of these areas. So I'm going to take my green, where's my green rectangle? Here, clone, and I'm going to move that one to a particular area, which was, there was one just there actually. Now there's something just to be careful of here. Now, because I'm on the 1 hour chart, these zones look like they're quite small, but I just wanted to make you aware that when you click on this rectangle and you click on settings, if you go to something called coordinates, you're going to see the size of this zone here. So this zone is the difference between 4591 and 4613. So in terms of points, that's about what, 22 points, okay, which is about 220 pips. So that zone is the size of about 220 pips worth. So remember, in our 5-minute charts or M15 charts, that zone might be a bit wide. So you might want to make that a little bit smaller, like maybe 100 pips, which is about 10 points if you wanted to. Okay, so if I just now go back to my pre-made example, which was this one here. Now what I'm going to do, obviously, because we had the support, right, from the indicators, I'm going to just take the indicators away now. Okay, and now we've got no indicators on here, no indicators on the chart. And what we're going to do, all right, we're on the 4 hour chart at the moment. Remember, the green zones here are my H1 zones. The blue zones are my H4 zones. And we are at 1st of April, which was April Fool's Day, right? There's no fools in this room, definitely not. So let's go, 5-minute chart. We've dropped to the 5-minute chart now. Okay, now what we're going to do is, I'm actually just going to show you now what happens to price. Now, does it react between these zones, yes or no? So what we're going to do is that we're going to hit play on here, and we're going to see what happens. All right, so we are what, 1st of April. Oh, would you look at that? What happened here? Price hit that zone, and what did price do? It reacted off it. Oh, what happened here? I'm just going to pause it for a second. Price went back to the H1 zone. It did a bit of a playing around here and decided, you know what? I want to break through this. I want to retest it, which is this, what we call little wick just here, and decides to go. And where does it go? It went straight to the next zone. So this is called zone to zone. Can everyone see that? Yeah, that is zone to zone. Literally price, it didn't just keep going down, down, down. It said, okay, I've got H1 here. I can see a strong zone where there's particular, maybe potential buyers on it. And it's literally just what we call wicked that zone, and then it's touched it again. So this is what's called a support. Let's carry on going and see what happens. Hits the support again. What's it going to do? Oh, it decided, okay, I'm done with that support. Now I'm going to break through it. So it did 1 touch, 2 touch, 3, 4, 5, 6, 7. It did so many touches before it decided, okay, I'm going to break it now. I'm done. And in this particular case, the H1 zone, it actually pretty much ignored it. It sort of said, oh, I'm going to break straight through that zone. I'm going to retest it, give you a potential chance to enter, and then give you a chance down to go to maybe to the next zone. Everyone see that? I'm just going to let it play out because I want you to see how prices react between these zones here. So again, touch, support, support. Well, it's 2nd of April now. Price is still lingering between that H1 zone, decides to go back up. Just keeps playing. And you can see, like, you know, when you sometimes hear, for example, in the Telegram, it says that price is just playing within a particular zone. And you can see here that price was literally what we call ranging, as in just bouncing within this zone, didn't want to do anything, okay? And then decides if it wants to look to break it or not. So this is called zone to zone. And this is just another example here. This is what date is this? Is a Sunday, right? So remember, the weekend's gone. Thursday, 2nd of April. and market opened on the Sunday, 5th of April. And where did market open? It went straight to the next zone, H1. Again, zone. So I'm just going to keep it running. Just keep it running. This is what we call zone to zone, basically. So price is literally playing within these zones here. Is that making sense? Can everyone see what the market's doing? Because I've literally just gone back in time. I've literally just said, okay, we're going back to the 1st of April. We're going to show you how markets actually react to these zones. There's no point showing you what's happened in the past. I'd rather try and go back in time and show you how price actually reacts off these zones as if we were at the 1st of April. All right. And you can see here how price is literally sitting within that H4 zone, doesn't want to do anything, and then eventually goes back to that zone. So what happens here is that what you can do is that you can literally, without any indicators, you can literally just wait to see what price does in these zones, basically. And if you're seeing, for example, what we've got here, the engulfing candlestick pattern, for example, or, you know, for example, this one here, if I just zoom in to this particular zone here, this is what's called an engulfing candlestick pattern, right? The red body is bigger than the blue here. You can see multiple touches here. This could be a potential entry for a trade. You could put your stop loss above the candlestick pattern, and you can target maybe the next zone. Unfortunately, in this case, it didn't hit the next zone, but you would have at least got wherever it was, where its price was 4651, went as low as 4638. So you would have taken at least 10 points, which is 100 pips in the market, just from a simple zonal move. Yeah. So I'm going to let that play out again within the H4 zone. And now, like I said, can you see how price strictly reacts off there and comes back up again? It literally is bouncing. And do you see now how that resistance, it breaks the resistance and then becomes a support here, and then again goes and gives you an engulfing candlestick pattern just here, another one just there, and you're good to go for another trade. And where does market target? The next zone. Can you guys see it? I mean, I can keep going and I can keep going because that was a beast of a trade, by the way. I know it was 8 in the evening, that one, so we probably wouldn't have taken it unless the evening trader was on. But you can literally see how markets are reacting from these zones. And this, you know what it is, right? With support and resistance, where people tend to go wrong often is that you can end up drawing support and resistance on like the 5-minute chart. So if I was to stick on, for example, my support and resistance here, you can see that there's a strong support just there, right? The blue lines. And the thing is, you can do that, but the zones are not going to be as strong as the H1 and the H4 zones. All right. So you got to remember is that we're just trying to put a cocktail of confirmations in your favor. Remember, all we're trying to do is tip the markets in your favor here. So we'll just keep this going. And where are we now? 8th of April. So we'll just see how it works, how it's going. You can see how market reacted once, twice, 3, 4 times before eventually making its way down to the next zone. Market decided what does it want to do. It's going to go support, break, strong candle. When I say strong candle, I mean it's a big candle that wants to try and break it. Eventually becomes resistance and then works its way down. Becomes resistance again, becomes resistance, 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 playing within the zone, breaks it, becomes support, rises, support, and then goes. You guys are seeing this like literally like in real time. Support, where are we now? 10th of April. Should I keep it going? I can keep it going. Support, support, is it going to break it? No, it's still a support level, strong support level. And then it reacts off it and gives you a nice move there. Like these moves are like quite big moves, you know, like 4750 to like 4784. It's a 300 pip move. Oh, hello. I'm going to stop the chart just there for a second because look what happened here. This was Friday, the 10th of April. There was a big gap in the market, which I assume was potential news of some kind that happened over the weekend. And where did price open up? It didn't open up like in some random zone here. It opened up in the exact H4 zone. Insane. And then market went back. That support has now become resistance. Yeah. So now at resistance. You guys seeing this? Yeah. Give me a thumbs up. I know it's a little bit kind of might be a bit tedious looking at the charts, seeing what it's doing, but I feel like this is important to see it happening in real time. So you've got to imagine that you're back in sort of mid-April time, probably enjoying some Easter eggs and last remaining chocolates whilst watching the charts. But you can see on here, for example, that resistance, resistance, resistance has now been broken, and now we're sort of playing in between zones now. And we're still going. Where are we now? Mid-April. So I can let this go. There's probably another couple minutes on here before we get back to where we were in May. But now we're in a strong H1 resistance zone now. So then we've got to maybe zoom out and see, okay, where's the next zone? Where is the next zone sitting? So we've got H4 zone, which is up there. So that's that really, and the other thing, key note to make as well, is that can you see, for example, where this zone is? It's right around what we call a round number. So the markets love whole numbers, round numbers. So what I mean by that is that markets like to target big round numbers like 5,000 or 4,900 or 4,800, that kind of thing. So these are called like whole numbers. If you look it up, you'll see something on Google about it as well. So there's often zones where people, big people can actually target. Can you see how we got resistance, resistance? So I'm hoping this all makes sense. I'm actually going to come out of this replay. I'm going to just jump to the real-time chart if I can. If I just exit replay mode, leave replay. But we are now at what, 8th of May here. But I just want you to show you in real time that look how these zones have been reacted, like reaction of their playing around in there, and then reacts and then jumps to the next level. All right, and becomes support, support, and then jumps to the next level. All right, this one actually broke all the way through that H1 level, and it's targeted the next H1. Again, with a wick rejection into H4. So I'm hoping this all sort of makes sense. You can see how powerful these zones can be. And if you just have these faintly on your charts going forward, like look, we're already now on what, 10th of May here, markets are going to open, and you'll already start to think like, oh, okay, now where do we think markets can go? Can it go to the H1 or can it go to the H4? And then you can look for confirmation, you know, and then when you can start to add in, for example, like your EMAs, like how we did before, you can argue that market's kind of ranging here because this is one of the confluences that we had. You can agree on me here that from this point, markets are trending upwards. So because of the EMAs and how they lined up, we should be only really looking for buys here. So automatically now you've got support and resistance, and now you've got your bias, your trend bias with your EMAs. But when you're seeing EMAs closed up like this, you can argue that market's kind of is ranging between these zones. It's a bit choppy, the market is. It's not really deciding what direction to go. All right. So that is support and resistance. That literally is support and resistance. So I'm going to take us back onto our slides that we had, and basically explain to you how would we look to sort of trade support and resistance. And the key answer is here is that we do not simply buy or sell at these support and resistance levels. We don't just say, oh, price has hit this resistance, we're going to click sell, or price has bounced off support, we're going to click buy. No, what you do is that you wait to see what price is going to do. Okay, so when I say we wait, it means that do we see, for example, a break and retest? And that basically means that the price broke the particular zone and then it touched the zone again before then giving you, for example, a engulfing candlestick pattern. You see, so what we do is that we use these support and resistance as potential targets. We use it as an extra confirmation to potentially get into a trade. All right. Now, a very important question is that where do we, for example, place your targets? I've already mentioned you want to target your next particular support and resistance zone, but very important is that your stop losses, where do they go? So if, for example, I was in, let's say, a buy, let's say I see here that price hit this zone and then I gave me an engulfing candlestick here, I might have waited for that one, or I might have waited for another engulfing candlestick like here, for example. Now my stop loss would go outside the previous low. And what I mean by that is that I'll be looking at the last point where price sort of bounced off, and I'll put my stop loss there. So if I was doing a long position of this particular trade here, I would be putting my stop loss outside of that zone. So I know it is quite a large stop loss in this particular instance because it is like 25 points, wherever it is. That's quite a lot, okay? But if you have your target as previous structure, which would be here, that's what you'd be aiming for. And that is still a 1.5 risk to reward ratio on there. But like I said, you could also target a 1-to-1 risk to reward ratio. And that means that you're risking the same amount of points as what you're wanting to get in the market. And this one actually did give you a particular win here. And that's only using 2 confirmations. It was using the support zone which was the H4 zone here. And the other thing you had was that your EMAs were in your favor. The blue was above the gray, and they are angling upwards here, giving you that that trend confirmation of a buy. All right, so that's just a small example of how you could use support and resistance, and that's just 2 confirmations. Obviously, we have more confirmations that we will be going through, and that would lead us into the next session, basically. So with that being said, what we've gone through today is that we have hopefully given you a bit more understanding on how support and resistance works, and how we actually draw the support and resistance on the chart. I'm hoping that we can now identify support and resistance, especially on the higher time frames, so the H4 and the H1. Okay, and then what you can do is optional, of course, you can then go onto the lower time frame and use the 15-minute time frame if you want to target some sort of scalping strategy and so forth. The other thing is that you do have your support and resistance indicator, which you can use, and you can also use that zigzag indicator as well as potential turning points in the markets. So if I just remind you of them, so if you remember, we had the fluid trades indicator, and we had the support and resistance indicator just there. All right, so now if I just go onto the H1 chart and then just refresh this as well, and then you can, let me just get the indicators, EMAs off, that's a bit too busy now on my chart. All right, so you can see, for example, that there's significant zones that are being played. Okay, so now if I'm looking at the H1 chart on here, you can see there's a particular H1 zone just here. All right, there's a H1 zone which we're currently almost in at the moment, and so forth. And you can just keep these indicators on, and you can draw future zones as they develop in the markets. All right, so hopefully, like I mentioned as well, when we go into the next few sessions, we'll be potentially using that as a confirmation. But like I said, what I want you to understand is that price actually reacts from these zones, and that's what we do. You know, support and resistance, like I said, it does not move the market. It's just zones where we see price tend to significantly or potentially change direction. So I hope that was a good session for you guys. And just to let you know that session number 7 will be all about entering a trade properly, and that will be covered in most likely will be next Sunday. So just listen out on the group for that one. Yeah, I look forward to seeing you guys next week, and just start drawing the support and resistance zones on your charts, and just watch what happens. You know, just watch what happens on the charts and see how price reacts to it. And yeah, I look forward to teaching you guys next week. That being said, have a great evening and catch up.